So
Good evening, future Maryland homebuyers. Thank you so much for being here. My name is Jackie Muick, Advocacy and Communications Administrator for the Maryland Realtors. I want to welcome you to the Your Home Buying Keys webinar. Assembled tonight, we have experts in the industry, including Felicia Brewster Bradshaw, a realtor with Compass Realty, Amy Minnis, a lender from NFM Lending, and Frank Monday from Maryland Department of Housing and Community Development, or DHCD. Tonight, you will get an abundance of information to help you navigate and succeed in your home buying journey. This webinar, I'm sorry. This webinar will be recorded and sent out to all attendees in the next 2 business days. We encourage your questions and we look forward to answering them. Please post all of your questions in the Q&A box below at the bottom of your Zoom screen. With that, I will turn it over to Felicia. Felicia, if you're ready, or do you need a few more moments? All right, Felicia, you are muted. I don't know if you're trying to say something, but if you need a few more moments, then we can go ahead and skip to the lender and we'll come back. So, Amy, if you can take it away.
Hello, everyone. Thank you so much for being here. I'm excited to be talking about the lending space. I feel like with most people, when they think about approaching a lender, it kind of makes your palms a little sweaty. You get a little scared because the underwriting process. Well, I'm here to take those fears out of the lending process because with me, you're working with somebody that has been in this industry for 10 years. My husband and I, we actually run a branch together at NFM Lending, and we love to say that we are family helping family. So, literally, you do not have to be scared to approach us at all. We are super friendly, and we're here to help you navigate your financial goals and make you homeownership ready. So, we're going to talk a little bit about the basics and Lending 101. So, again, my name is Amy Minnis. If you guys would like to screenshot my contact information, my phone number, my email, my website, and my Instagram are all listed here. Okay. So, when thinking about buying a property, right, there's always the question of should I continue renting or should I make this huge purchase transaction and buy a house? So, here are some of the benefits of purchasing a property. Number one is my favorite, equity. So, equity is the difference between what you owe on your home and what your home is worth. And the cool thing about home ownership is you can just be sitting in your house, making your mortgage payments, and every single year, your home most likely, according to the national average, will appreciate about 4% year over year. That equity is future money in your pocket, whether you decide you want to sell in the future, if you want to borrow from that equity. That is how most people gain their wealth in this country, through equity. So that's one of the great parts about homeownership. Number two, which is awesome as well, when you're renting, you don't get the ability to write off your rent payments. You just don't. But come tax season, when you go to file your taxes and you're a homeowner, you get a statement at the end of the year called a mortgage interest 1098. And it's going to show you the bottom line number of all of the mortgage interest that you've paid throughout the year. With your tax preparer's guidance, you're able to write off that mortgage interest, and it helps you to either hopefully get a higher refund or reduce your tax liability, which is always helpful given these times that we're in. You also have security when it comes to homeownership. You have fixed payments with your principal and interest as long as you do a fixed interest rate. And you have stability, which is always a good thing. So this is what really just makes you go, what? This is crazy. On average, homeowners' net worth is 40 times greater than a renter. On average, homeowners have $396,000 of net worth, whereas renters, a mere $10,400. Obviously, this isn't always the case, it's an average, but this is mind boggling. So, this is again why people say the easiest way to develop wealth in this country is through homeownership because of that equity we talked about in the last slide. All right, so you have decided, you have made the choice to purchase a home. What should you look for in a lender? I feel like the average person, when they think about purchasing a home, they're like, okay, I'm going to go to my bank, whether it's Bank of America, Navy Federal, I'm going to go there first. What you want to know about big banks is that mortgages is not technically what they specialize in. They have all these other different forms and avenues to make money, right? So they offer checking accounts, they offer savings accounts, they offer car notes, they offer installment loans. And yes, of course, they offer mortgages. But when you offer that big suite of products, that means again, it's not what you specialize in. So when you're a first time home buyer, I strongly recommend looking into your local options of mortgage companies that are direct mortgages, where mortgages is all that they do. Because when mortgages is all that the lender does, they clearly know what they're doing. And then they're also partners with local organizations like Frank here, the Maryland Mortgage Program, to offer you down payment assistance incentives that are local to the area that these big banks that might be located really far away might not understand or know about. So I think that one, you want to start with local and direct. Two, you also want to work with a lending institution that is transparent. That is the biggest thing. You don't want somebody that's going to make you all of these promises and then bait and switch at the end. You want somebody that you can trust. You want a lender that's going to offer a variety of options and just instead of just saying, hey, here, this is all that we can offer you. You want to be able to have choices because choices equals power. You also want to see strong communication skills, responsiveness, again, experience with first time homebuyers. All of this is super important. And I would also encourage you to look up their reviews and make sure that they are reputable. All right, so this is a question that I get a lot. What is the difference between being pre qualified versus pre approved? A pre qualification is when I sit down and talk to someone and they're like, hey, Amy, I make X amount. I believe my credit score is X. And these are my monthly payments. What kind of mortgage do you think I could get or I could qualify for? A pre qualification is like an unofficial, informal process where the numbers aren't really backed up with anything because I haven't reviewed your documents. I haven't looked at your pay stubs, W 2s. I don't really have documented proof of the things that you've told me. And I'm just giving you kind of a roundabout number of what I think you might qualify for. A pre approval is much stronger. And when you go to make an offer on a property, that's what sellers are looking for. They want to know that you have done your due diligence, that the lender that you're working with has done their due diligence to make sure that there's not going to be any issues as your file moves through underwriting to the next step of clear to close. So pre approval consists of me taking an application from you, doing a soft pull on your credit, making sure I look at all of the documents, and running you through that automatic underwriting system to make sure we are good to go. So the benefit of that is that it's way less stressful when you start that home shopping process because you know exactly how much you can afford. And who wants to start shopping if they don't have their budget in mind? That's what I'm here for, to help you figure out what your budget is. And of course, also real estate agents prefer to show people homes that are pre-approved rather than pre-qualified. This is a next big question that I get. How high does my credit need to be? I will be honest with you guys and let you know I have been able to pre approve someone at a 520 credit score. I will say there is a caveat with that because if you're starting that low with that low of a credit score, you're automatically going to be looked at as more of a risk to the lender. So in that situation, that client, in order to move forward, had to put 20% down. It was in her wheelhouse to do so, but that's not everybody's story. That's not everybody's situation. So if we're looking at an average situation, most lenders start out at a 580 credit score that they want to see for an FHA loan. But for all of my first time home buyers that want to use the incentives that are out there, typically we want to see a 620 upwards to a 640 or a 680 for certain programs. And then obviously, the higher the credit score, the less of a risk from an underwriting perspective. So that means you're going to get a better deal. So I don't want that to discourage you guys, because one thing that NFM prides themselves on is the fact that we only do soft pulls on your credit because we want to protect you. So you can come to me even if you think your credit score is a 520. Let me check it out and let you know, because if you're looking at Credit Karma, it's not going to be 100% accurate. When we go to pull your credit scores, we're looking specifically at your mortgage FICO scores, and Credit Karma is showing you a different score model. So you're going to want to make sure that you get with a lender so that way you can know exactly where you stand. Also, lenders, we have something called credit score simulators. So this is an example literally of a credit simulator that I pulled for someone. I was trying to get her eligible for the Maryland mortgage program because their credit score minimum requirement is a 640. Well, she was sitting at a 636. These tools tell us things that can immediately be done to improve your credit score. So in her case, all she had to do was pay down $31 on one of her credit cards, and she had to get one account deleted off of her credit report that was reporting incorrectly. And doing those two things was going to shoot her score up to a 669 so she could qualify for down payment assistance. These are the types of tools we can help you with. But if you're scared to talk to us and you don't come, then how are we going to plan out for you? So that's why it's important to make sure, again, that you're speaking with someone that knows what they're talking about. So real quick, I'll just go over the anatomy of a credit score, because I know that this is not something that is taught in school. A lot of people don't realize this. The biggest part of your credit score is payment history. The credit bureaus want to know that you are a responsible borrower. And how they determine that is, what is your past payment history? Have you been paying your cards on time? My biggest suggestion that is super easy is put all of your cards on an auto payment if that's in your wheelhouse to do so. Because even one 30-day late can really hinder your credit score. A 60-day late can tank it, and a 90-day late, we don't want to see that. So make sure you're paying your cards on time. It's super important. The next thing is your utilization ratio. This makes up 30% of your credit score. I feel like the biggest rule of thumb that most people hear is keep your utilization ratio under 30%. So for instance, if you have a credit card where the limit is $1,000, keep your balance under 300. Well, actually, the most aggressive way to get your credit score up is to keep those balances less than 10%, which is hard to do. So that's, if you have $1,000 balance, $1,000 limit, keep your balances under 100. If you can do that, it's going to help boost your score. The next things that go into credit score are your length of credit history. So how long have you had credit cards open for? How long have you had your car note? All of that. The longer history, the more the credit bureaus are able to analyze what type of borrower you are. So it's good to have lengthy credit history. Credit mix is just like, do you have a credit card, an installment loan, and a mortgage? All of those are helpful. If you have different types and varieties of credit, that's good. And then new accounts and credit requests is inquiries. You want to try to keep that down as much as possible and only really apply for things that you actually need. And again, that goes back to why we try to protect your credit by not putting a hard inquiry on your credit score until you actually go under contract on a house. So that is what your credit score is made of. All right, the fun part, getting pre-approved and talking with my team. What do we need from you? So we're going to ask you to fill out an application with our team. It most likely takes no longer than 20 to 30 minutes to get through. It's going to ask you what you've been doing for work the last 2 years, where you've been living the last 2 years, how much you currently have saved up, and then lastly, some government monitoring questions. After that, the system is going to prompt you to upload these supporting documents. which again helps us with that pre-approval process because it's backing up what you're saying on the application. So we ask for your last 30 days of pay stubs, 2 years of W-2s. If you are a 1099 employee, in our eyes, you are self-employed. So we would look for 2 years of tax returns. Or if you truly are self-employed, we also look for 2 years of tax returns. We ask for 2 months of bank statements, a photo ID, and just details about where you want your down payment to come from. So, as far as down payment and closing costs, where can you get this money from? We allow you to pull money, of course, from your checking and savings, that's obvious. But a lot of people don't realize that you can actually pull from your retirement account for homeownership, especially if you plan to occupy the property as your primary residence. And I challenge you to look at this differently because a lot of people get scared when they hear pulling from retirement. However, you can think of it as pulling from one investment vehicle and putting it into an even bigger investment vehicle because sometimes homes appreciate at a higher rate than the money is sitting in your retirement account anyway. So if you decide to pull from your retirement account, it's not like you're losing anything. You're actually just putting it into a different vehicle. So a lot of my first time homebuyer clients that might not be eligible for first time homebuyer programs or it just doesn't make sense for them, they explore this opportunity as well. Another thing is gift funds. So if you have a parent, a relative, someone that's willing to gift you the funds for down payment and closing costs, we absolutely allow that as well. All right. So real quick, I want to show you two different scenarios of how much money do I need to close. So these are real life examples of presentations I have put together for clients. Down payments usually vary for a first-time homebuyer between 3% to 3.5%. And then on top of that, you have closing costs, which is about another 3 to 4% of the purchase price. So in this scenario, this first one here, we have a $309,000 purchase price on an FHA loan. This client's payment with everything included was coming out to $25.28, and their cash to close, if you can see it down here at the bottom, was $27,217. That was a worst case scenario, them paying full down payment, full closing costs, not getting any seller contributions. Now, if we shift over to this last column here, this is utilizing the Maryland Mortgage Program, which Frank is going to talk about. This knocked off a lot of the bottom line number, where now this client is only bringing $12,547 to close, and the payment is exactly the same. That is the power of down payment assistance. And then if you pair that with seller contributions, where the seller pays a portion of your closing costs, I've seen clients not have to bring anything to the closing table. Like in this scenario here, where my client was buying a $500,000 home in Columbia, Maryland. She used the Maryland Mortgage Program. We got her seller help. Her cash out of pocket was only $2,800. So I just want to end talking a little bit about what the market outlook is looking like. As we end 2025, mortgage rates were expected to settle around the mid sixes. We have seen much improvement week over week. Heading into 2026, market experts think that rates are going to kind of get right below a 6.5, which is going to be awesome. The average listing price has flattened, which is good for home buyers. That means the market is really balancing out. And over 30% of homes on the market right now are newly built. So that's offering even more choices. And lastly, I just want to show you again the power of equity. If you buy a $400,000 home today in 2025 and you let time do the rest, in 5 years, you have the potential of having a home that is worth $483,251. That is just based off of time and not you even paying down your mortgage. That is powerful. So I want you to take that home with you as we go into the next part of this presentation. And thank you guys so much for your time. And I hope that we get the opportunity to work together.
Thank you so much, Amy. And I'm so sorry I skipped over in my script Amy Minnis from NFM Lending. Thank you so much for being here. Just a few questions have come in before we move on to Felicia. One question that's come in is about the benefits that are offered to you in a mortgage and a down payment for a first home versus a second home. So someone's asking you about buying their first home, but renting it out instead of living in it. So a little bit of the details also about when it's not your primary residence, what the differences there are.
I think that is such an amazing question because a lot of people think that after they buy their first home, now they have to put 20% down for the next one, and that's not the case. So, a lot of people for their first home, they might utilize FHA financing where you only have to put 3.5% down. And let's say that was your case, and now you're ready to move on to the next home after a year. We can move forward with a conventional loan where you're only putting 5% down, which is awesome. Or for the case of a person who is a first time home buyer, they do conventional financing and we're able to get them in with 3% down. For the next home, they can do an FHA loan as long as they're occupying it as their primary residence and put 3.5% down. So there are still options as you look to move forward with your investment goals. And I always say to buy the first house and live in it, and then make that property your investment property, and then buy the next house and live in it. And then you can keep doing it that way instead of saying, oh, I just want to go buy an investment property. Well, that's automatically 20% down. Great question.
Awesome. Thank you. All right. For the gift fund, does it need to be specified as a gift fund if it's a down payment from someone else? And does that offer an incentive at any point?
Another great question. So, yes, we actually have to document where all funds come from for the transaction. So, gift funds, they're definitely allowed, but we have to get a gift letter template in the file, which we'll send to you and the gift donor. You guys both have to sign it. So, we know exactly where this money is coming from. In certain circumstances, we also have to get a bank statement from the gift donor to show that they had the money in the first place to gift you the funds. So there is a little bit of added documentation needed, but it's definitely worth it if you're able to get that gift. As far as further incentives, no, we just like to make sure that we have that information documented.
Awesome. And last one right now, are tax deductions as high currently as they used to be?
You got to talk to your tax advisors about that. But what I have heard on the streets is that it's not because you have to meet a certain like threshold every year to be able to get those incentives of writing off the mortgage interest. So I think you have to get up to like 21 or 25,000 depending on your income limit. But definitely talk to your tax preparer because that is not my wheelhouse.
Awesome. Thank you so much, Amy.
Thank you
We may
guys.
have more questions for you at the time. So if you think about something and you're like, oh, I really wish I had asked Amy that, feel free to put it in the chat. If Amy's able to stick around till the end,
I'll
she'll
stick
be able
around.
to answer it then.
Thank you guys.
Awesome. Thanks so much. And now on to Felicia.
Thank you, Jackie. Appreciate it. So my name is Felicia. I am a realtor in Maryland, DC, and Virginia. I will say, with being licensed in all three, the Maryland contract is actually my favorite because you have the most protections in terms of the gift fund addendum, things like that that Amy was talking about. Jackie, do we have my slides by chance?
Yes, yes, I
Okay.
will get those.
No worries, no worries. But I have been licensed for going on 9 years, and I'm super excited to talk to you guys in regards to how to prepare on the search side. I will say one of the things I'm going to talk about is how important it is to talk to the lender so that we know what we're kind of stepping into when we start looking for homes. Awesome. Perfect. Thank you. I think I might, do I have the wheelhouse there? Not sure.
Can you do the control of
Yeah,
the
I can
slides?
scroll. Yeah.
You should be able to request remote control.
Okay, let's see if we can. is, oh, is that with the little pencil? And nope, that's the annotation.
That's fine. I can move it along as you
Are you
ask.
sure?
Yeah, that'll
Okay.
be fine.
Okay, awesome. Thank you so much. So again, just a little bit about me. So I do serve on several committees in regards to on the Maryland side, Virginia, and the national level. I am certified with At Home with Diversity, which is a class that realtors can take just to make sure that they're on top of everything in regards to changing things in the industry. But let's go next. There's a little mouse here, but I don't know if it's going to work. I don't think it is. Okay. So just a couple things that we're going to run through. Whenever you meet with your realtor, you're going to go through a couple things. Typically, it's just introductions. Hi, I'm me. You tell us a little bit about you and kind of what your goals are. We'll go through like the buying process, what it takes and what you should be looking for when you find an agent, and what representation means in regards to being represented as a buyer. Because when you go to look at a home, there are some, the seller is often represented by an agent. Preparing your finances. So kind of everything that Amy has talked about, you're going to, talk to a lender and get ready financially. Starting your search. So learning a little bit more about what you would like to have in your next home, some must have, some nice to haves. And then we're going to do what it takes to make an offer. So we'll kind of go through the different components of the offer, and then contract to close, what to expect when you're actually under contract, and then your final loan approval. So that would be an Amy thing that she's already talked about, and then what it means to close the deal. Awesome. So some of the terms that we're going to go with, kind of go through that Amy has also talked about, is your down payment, the mortgage portion, the appraisal, the home inspection, contingencies and what contingencies they are, the offer portion, and then your closing costs, which Amy also talked about, disclosures. So Maryland does have a slew of disclosures when you're buying a home, the title process. So picking a title attorney to help, and the title attorney represents the transaction. They don't represent you or the seller. What it means to be an escrow, under contract, and then how we finally get to closing. So when you're looking for a buyer's agent to represent you in the process, a couple things that you want to touch on when you're meeting with them and some questions to ask are, one, how long have you been doing this? Do you typically maybe represent buyers, or do you represent sellers? How do you negotiate? Are you kind of a pick up the phone and talk to the other agent? How would you represent me in the process? Are you like a firm negotiator, or do you kind of just go with the flow? Professional standards. So how do you feel in regards to the conversation that you're having with them? Do you feel, are they answering the phone? Are they obviously taking you out on tours and explaining things about the process to you? And then customer service. So what is your preferred method of communication? Express that to your agent and make sure that you're okay with that relationship, because obviously buying a home is no small feat, and you want to feel comfortable with your entire team, from title, lender, but especially the agent, because you're going to be spending the most time with them, whether it's going out on the weekends, doing your home inspection. You're, for a chunk of time, you're going to see them quite a bit. So you just want to make sure that you feel comfortable during that entire process. Preparing your finances. So I'll go quickly over this one. But one thing that when you first meet with an agent, they're going to tell you to talk to a lender. You can't really start that home buying process until you do touch base with your lender, because one, you need to know how much you can spend. Two, our market moves extremely quickly. So when Amy was talking about big banks, one other thing that's really important is, if we're looking at homes on Saturday, can we call your lender at 4 o'clock and say, hey, I want to make an offer on this house. Can you get me an updated approval letter? If it's a PNC, no offense to PNC, but it's a little challenging to call them on the weekends. So the local lender is really crucial to this process. And on the selling side, that listing agent is going to call your lender and make sure everything's good to go. So working with somebody who knows our area, maybe even obviously lives here, is really important, because one, they're in the same time zone as us, which is really important. Two, we can talk to them on the weekends. And three, they're going to be able to communicate with that listing agent that you're solid and you're good to go. I think I might have 2 slides on that one, but we've already talked about finances and you guys are all set. Okay, I'll do this one real quick. Some costs to consider upfront costs when we are looking at homes. So your lender fee is going to, I apologize, it looks like I clocked out on service there. The lender fees are going to be a portion that you should talk to the lender about because there might be some upfront costs outside of those closing costs. But in terms of your inspection, you will have a home inspection that typically is going to be based on the size of the house. So you have around 400 to 800, meaning maybe that 400 mark is a condo versus 800 being a single family detached home. If you choose to do a radon test, radon is found in the ground. So it's often the breakdown of uranium that kind of seeps up. If you'd like to do that test, it's roughly about 200 on average is what we're seeing. And radon can be anywhere. So if you're looking at homes, your buyer's agent might point out a radon system if they see one. A termite inspection, typically seeing that around $60 to $90 right now. And then your well and septic, depending on what county you're purchasing in. And if you're using a VA loan, that well test, we're going to be a little bit higher around that $1,200 mark based on what it is going to include. Your closing costs, the lender can get you a closing cost summary so that you know what you're going to be spending kind of ahead of time, either per home or roughly in your price point. Um, when we're talking to you, we roughly recommend looking at about 2.5% to 3%. And then your moving costs and fees, which are obviously afterwards. But if you'd like to have movers help you move, and then always recommend that you have a little bit of a cushion when you move in the event that you want to make changes or if something breaks. So when you start your search, as I mentioned, you're going to have maybe some nice to haves and some must haves. So maybe a must have is you need to have a backyard because you have a dog, versus a nice to have is I would love to have wood floors instead of carpets. But that's something that you can change. So when we're looking at homes, I always say, what is 80% that you love, 10% that you can live with, and 10% that you can change. I just want to touch on this radon test just because it's in the moment right now and we just talked about it. But after doing a radon test and time goes by, could radon be present in the future? How often should a radon test be completed? You're looking at it can change at any time. I typically recommend that if my clients don't have radon at the time of purchase, that around every 2 years you should be testing. Some home inspectors might recommend there's a test that you can buy at Home Depot that kind of looks like um, almost like a carbon monoxide like plug-in, but it sits on the counter on the basement. And if it goes off, so it's measured in picocuries. If that's over 4, you know that you should maybe get a home inspecting company to come in and do a test. That typical radon tests are about 24 to 48 hours. So yes, you can get radon in the future and you should be regularly testing for it. Okay, so back to the search. So the nice to have and the must haves. What neighborhood do you want to be in? If you already know the neighborhood, it's really easy to set that search up. But if you're really, I don't know if I want to be here or here, I'd recommend that you look in multiple places at once. We're back on the video. I'd recommend that you look in multiple places just to make sure that you are okay with the commute. Do you have to go into work at rush hour? Maybe you should see the home after rush hour so that you know that you want to be that commute's okay with you. So there's different parts of your search that you should consider. It's normally price, location, size, and condition. And normally clients need to give up one of those at some point in time. And what are you willing to kind of make a concession on? Maybe it's condition because you're willing to paint, or maybe it is location because you want a bigger home and that's a little bit further out. Recommend that you attend open houses. If you're just starting your search, get to know a neighborhood. The weekend's the best time to go. You get to see people out and about. People are cutting their lawns, people are home. So recommend going to open houses and then definitely doing showings at different times. Making an offer. So you finally found the home that you love, and now you want to make an offer. The offer has a lot of different components to it, and the Maryland contract, when complete with those disclosures, is pretty lengthy. But when you're looking at your home, the offer, you're obviously looking at price. and that's something that you've talked about with your lender, whether you're willing, if it's a competitive situation, you might be escalating to a certain price point and you've checked out with your lender, like, I'm okay and comfortable going up to that price. It includes what type of inspection you're going to do and how long or quickly you're going to do it. If you have that well and septic, that's going to be in that offer. And then your financing and appraisal contingency, which we would get some information from the lender on, but that is part of the offer as well. One thing is when we're negotiating that contract, if we've submitted an offer on Sunday, we might be talking a little bit later at night because we're going back and forth with the seller. But being flexible in terms of it is a give and a take. You know, if something is really important to you in terms of XYZ, but something else is important to the seller, where can we meet in the middle to make all parties content with that offer? So, what makes your offer strong? If we're in a competitive situation, we're looking at a couple different features here. So, I've labeled it from strong, stronger to strongest. I want to say that first column where it's strong is we're in kind of an even keel market where listings aren't really moving super quick, but they're staying on a little bit longer. But it is priced competitively, so we might look into that strong column. In terms of financing, if it's I would say, let's say a regular offer, meaning we're not in a competitive situation. We're looking at maybe 21 days where that's comfortable. It gives the lender enough time to do their stuff. We're not really pressuring them. We're also maybe not on a holiday like schedule, so we're not really worried about holidays being cut out of that. Same for the appraisal. So that gives us 21 days for you and your lender to order that appraisal, pay for it, have the appraisal come out, and make sure that the value is what we said that you would be willing to pay for the home. Inspection, the right to negotiate. So there's the right to void, negotiate, or I don't recommend it, but we have seen it where you don't have an inspection at all, or maybe you've done a pre-offer inspection. So the right to negotiate would give you as a buyer the most power. So you can either, if you find something that is so wrong that you, let's say the roof is 29 years old, but it's a 30-year-old roof, shingle meaning, then, and you weren't willing to take on that cost, the seller's not willing to replace it, you know, that gives you the right to, one, we've asked them to replace it or give you a credit, or if we can't come to terms, you can walk away. And then the escalation addendum, if there is an escalation, you're looking at maybe putting an increment in there. The escalation addendum is when multiple people are writing on the home and you are willing to pay X over the list price. The closing timeline, we typically see about 30 days in our market, maybe shorter if it is a competitive situation or if it's a cash offer. And then your earnest money deposit, which is a down payment on your down payment, it gets credited back to you at closing. Typically see about 1 to 3%, 3% being on the stronger side, and obviously going up as that offer increases in its strength.
Felicia, could you clarify that that 3% is not 3% of the total cost of the house?
I can, because it actually is 3% of the total cost of the house. So I'll so typically there are lower down payments. So I will use an instance. I have a listing in Fort Washington. We're listed at 325 and we got an offer in. And the earnest money amount was 3,200, which is 1% of the list price. It was not a competitive situation, and being that it's a lower price point, we do typically see that 1% amount on a listing. In the event that it became a competitive situation, we might have seen 2 or 3%, which would mean that, you know, instead of 3,000, it would be 6, and then at 3%, it would have been 9,000. That money does get credited back to you toward your down payment at closing. So it goes to the title company. The title company holds it for the duration of the contract. In the event that you walk away from the contract because, let's say, we couldn't come to terms on the home inspection, that money comes back to you. If you decide to move forward with the contract, you'll see it as a credit item on the closing statement. And if you were putting 3% down for your down payment or 3.5%, and you've already done 9,000, you would only be bringing that 0.5% for your down payment to closing.
Thank you.
Okay. Yeah, no problem. So getting a home inspection. So on the last slide, we mentioned the right to negotiate, the right to avoid, or you can also do a pre-offer inspection. I always advise, even if you feel like you know everything about houses, that you still get an inspection, even if it's a walk and talk. A walk and talk is essentially a inspection where you walk through with the inspector for about an hour. They go through all of the major systems. You don't end up getting a report, but what you do get is kind of they will go through, open everything with you. You can take notes or you can record, whatever's easier. But that inspection is going to go through all major systems of the home. So your HVAC, your hot water heater, um, anything like that. And it's extremely important for you to do. I think after that, it's really just about of the home appraisal with which Amy actually already touched base on. So I think we can skip that one. For that question, I will touch on it real quick about inspections. You cannot request a report for a walk and talk because it's really about finances. The reason it's an hour and doesn't include a report is because you only have an hour to walk through the home despite size. So if you want a report, would recommend just getting a full home inspection. So in terms of closing the deal, you're going to have your closing disclosure, which comes from your lender. We do one more walkthrough to make sure everything looks the same. And then we also review and sign the documents, and then you get the keys. So that's it. I think, yeah, okay, touch that one. Perfect. Thank you so much, Jackie. I really appreciate it.
Awesome. Thank you so much. And yes, that is that you've already hit on the main questions that came on through. I'm seeing one question in the chat about specifically the first-time homebuyer savings account. And I'm not sure if any of our panelists like want to talk about that. But the first-time homebuyer savings account, for anyone who doesn't know, is a unique benefit to future first-time homebuyers like yourselves in Maryland. Amy or Felicia, do you guys want to share any information about it?
Jackie, which program did you mention?
The first-time homebuyer savings account?
Oh, I don't have any experience with that one.
That's totally fine. So
I
one thing I will say, oh, sorry, Felicia, go ahead.
it's okay. I'm sorry. I haven't had a client use it either. I'm sorry.
Well, that's part of the wonderful thing. So thank you very much for asking this question. Is it's something that a lot of people don't find out about until they're already looking to buy a home. And at that point, it doesn't necessarily help you as much as if you're planning to buy one down the road a little bit more. Um, I am not a tax person, disclaimer. But in my understanding of it, and you should definitely talk to a tax person about this. But the first time home buyer savings account is set up so that you can save money for your first home. It is not a specific type of account. It is a little misleading. That you get at a specific bank. You can designate any savings account as your first time home buyer savings account. And then you get a tax benefit at the state level when you file your taxes on the amount of money that you have saved in that account. There are requirements in like you have to use that money to buy a home. You do have to buy it within a certain amount of time, I believe, of setting up the account and designating it. Um, but it is something that is supposed to be able to give you a tax break so that it is easier for you to buy a home and is more likely that like, any amount of money is going to help, right? We get it where we can. We do have, if you haven't already seen it, a one-page flyer giving you more information about that over on marylandhomeownership.com. So highly recommend you have check it out, but I would definitely recommend you talk to a tax expert on that. Frank, I see you are ready to go, but I'm going to really quick share and I'm going to real fast go over our information that we have from Freddie Mac. Our friends
That's
over at
fine.
Freddie Mac is not able to be here today, but
Okay.
that is all right because we're going to go ahead and go through this presentation. All right. So first off, Freddie Mac, you've probably heard a little bit. It is a program to really help with home buyer education. That's the name of the game for them. So it's one of the great places for you to start when you're looking at buying a home. So they have a few different programs. They have Credit Smart, which is a suite of free financial capability and homeownership educational resources. They're meant to help give you the tools and the knowledge that you need to be able to be a home buyer and feel like you know what you're getting into and that you're going to be able to make the best decisions possible. It is ADA accessible, it is online, it's in multiple languages. There's a whole bunch of wonderful things, and it gives you a lot of really good information. And you're already here and you want the information. So it's a really great place to keep going and learn more of the details, and it's self-paced. So there are two different sides to it. There is the financial capability, which will give you like the essentials, the coach. Um, it gives you a lot of the basics. And then there's a home ownership education, which is Home Buyer U, that gives a lot more focus to not just financial wellness, but specifically home ownership. There's a whole bunch of things here that we can go about. There's a one, you can pick it up when you're ready. There's progress trackers. You can pause and resume. There's audio, there's videos, they're interactive. They try to make it as easy and as fun as they can possibly make it to get you to get the information that you need to be a home buyer. So there are 5 different modules. That you have you set your goals, you're learning how to earn and then spend it, you're learning about borrowing, so you're learning about credit, which I know is really complicated because people don't talk about it enough, and how to eliminate your debt, and like kind of the strategies there, and borrowing smart to be able to achieve your goals. Then you plan to save, and then you prepare and protect. So getting that stable financial future so that you're going to be able to protect your investment and hold on to it. Paths for education. So the Credit Smart Homebuyer U is also something that you may be required to take to qualify for specific products like Freddie Mac Home Possible or Home One Mortgage. So they offer some things that this homebuyer class will qualify you for. And so your lender may tell you when you're like going through the process of getting pre-approved and going through that loan process, hey, you need to go and take this class so that you can qualify for this additional help, or this program that you're trying to get a good interest rate or whatever other benefit from. And that's all about that. If you have any questions, please feel free to follow up in the email that I will be sending out. But I'm going to pass it over to Frank, our good friend at the Maryland Mortgage Program.
All right, Jackie, thank you for the opportunity to be here with everyone. And let me see if you can guys see our website. This is the Maryland Mortgage Program website. Can you see it?
Yes, we can.
All right, cool. So I would direct you here, and thank you for being here. Thank you for giving us a bit of your time as you're going through the challenging process of figuring out what's next. So I want to say that MMP we are part of the Department of Housing and Community Development. We are a housing finance agency. So we don't work directly with home buyers that are trying to purchase a home. We're more like on the background. We provide funds for lenders to use and down payment assistance programs for homebuyers to take advantage of through participating lenders with the Maryland Mortgage Program. So NFM Lending is a participating lender, but if you want to come to mmp.maryland.gov, you're more than welcome to. And if you scroll down, you can get basic information regarding how to find the lender to use the Maryland Mortgage Program, how to prepare yourself towards homeownership with the Maryland Mortgage Program, and learn more about our programs. For me, I just want to take you to some of the eligibility guidelines for the Maryland Mortgage Program. So I'm going to scroll down to the professional portal. And this is where all of our lenders go to get the basic information for the Maryland Mortgage Program. I'm going to go under program information. And I just want to show you some things that are very important. And some of them don't apply to you. Fact sheets on all of our products are listed in here. Okay. All of our products are 30-year fixed. So we have no adjustable rate mortgages. We have no buy downs. All of our mortgages are going to be 30-year fixed. And most of them come with down payment assistance. Okay. And we list all those products here on the first time advantage side, on the flex side, and the specialty products as well. So you can come here and take a look at those. So that's that. I want to take you to our product line, and I'm going to go down to, let me see here. I can go under the dual track product line, or I can go under interest rates, and I'll put up our rate sheet. Our rates come out at 10 o'clock every morning, and these are available for our lenders to use. So 10 a.m., that's when the rates come out. These are the rates today. The first time advantage direct and the flex direct It's our lowest rated product as far as lowest interest rate. And it comes with no MMPDPA. So there's no down payment assistance, but typically this would be for a borrower who has money for down payment and closing cost assistance, or has their own funds, or they're getting some seller help or family help or some other sources, and they can just get our lowest rate. So that's our lowest rate, just below 6%. And then we have other products that offer you either a partner match that comes with a $6,000 down payment assistance product from us, and a match can increase it by another 2,500. So it could be an employer match, a builder match, a community program match. That could be a city, that could be a county, many different products. Then we have a product gives you 3% of the down payment, 3% of the loan amount towards down payment and closing cost assistance, 4%, 5%. This is our most popular product, the 5% product. That's the interest rate for the government. Government, that would include FHA, VA, and rural housing. Conventional rates are always going to be a little bit higher, okay? And that's market-wide. That's not set by MMP necessarily. It's based on the market. Homestart is a product for borrowers below 50% of AMI, and we'll talk about that in a minute, just to give you an idea of what that is. And that gets them, that's the rate for that, but that gives you 6% in down payment assistance. And the rate for the Homestart is really about the same as would be for our 3% loan product. So if you fall below 50% of AMI, you can double the down payment assistance from 3% to 6%. We have specialty loan products as well. In Montgomery County, we have the MEPAL product. That's for first-time home buyers that work for Montgomery County government in certain departments, and that comes with a $25,000 DPA loan. Has separate income limits, not the same income limits as MMP. And Montgomery County also offers the Montgomery County Homeownership Program. That would be for anyone that's purchasing within the county, not necessarily county employees. And it's basically the same basic interest rates. It just has a couple of guidelines that are slightly different. And of course, we offer the Maryland Smart Buy, which is a very popular product. The Smart Buy money is up to $20,000. So up to $20,000 will be paid off at closing, and it'll be forgivable over 5 years. The key is that if you owe more than $20,000, you'll have to pay off the difference at closing. So it really works well for somebody that owes 22. You bring in 2,000 to bring it down to 20, and we'll pay off the difference at closing. There's an option with no DPA, an option with 6,000 in down payment assistance, and just like Homestart, if you're below 50% of AMI, you can get 6% in down payment and closing cost assistance. And lastly, we have the Maryland Homeability product. The Maryland Homeability product, that would be for a household who has a disabled family member. Disabled family member could be a borrower, or it could be a member of the household. And that's a conventional only product with a loan from Fannie to Freddie up to 80%. And the second loan, the 20% and even closing costs can be rolled into a 0% deferred note from the state of Maryland. So you could have up to 46,000 that you're not making payments on, and it's not due to be paid back until you pay off the first mortgage. So it avoids mortgage insurance completely, and it lowers the cost of homeownership because you're not paying interest on a portion of your mortgage because it's being held by the state as a second lien. So these are the products. MMP is hopping. We're getting like between 350 to 400 reservations a month, and we've been doing that for months. Really, we're approaching levels where we were about 3 years ago when interest rates were a lot lower. So those are our products, and you can come to the website mmp.maryland.gov and take a look at that. Look at those. I know this is a short scenario. There's some other things that you have to do with the Maryland Mortgage Program. You have to obtain homebuyer education, and that's a requirement that your lender will walk you through. It must be from a HUD-approved housing counseling agency or an NIS-approved housing counseling agency. So housing counseling is required. It's one of the requirements of the program. And if we take a look at the income limits for the Maryland Mortgage Program, they're pretty high. They're not low income limits when you compare it to what counties and cities can offer you. So in the Baltimore area, household of 3 or more, is 184,380. That would be for Anne Arundel, Baltimore City, Baltimore County, Hartford, and Carroll. And in the DC area, household of three or more can go up to 229,460. The maximum purchase price, there's limits on that. It's listed at the bottom here in the last column. So in the Baltimore area, is 731,400. And in the DC area, it would be 806,500. And all the counties may have lower income limits and purchase price limits than that as well. So there's 6 basic eligibility guidelines for MMP. And really the lender will provide a packet to us that has all that information, including the credit report, credit scores. The credit scores for the Maryland Mortgage Program, you have to be at a minimum of 640. MMP requires a 720 credit score if you're doing a Maryland Smart Buy, and that's the only product that's higher than our minimum credit score, 640. The debt to income ratio, meaning how much you can spend out of your monthly income towards housing, can either be 45 to 50 with FHA, VA, and rural housing. And for conventional, you can go up to 50%. But there's specific things that the lender has to do to make sure that they can get up to that 50% debt to income ratio. So technically, there's more to it than what I'm just saying. But I'm just giving you a general idea. The Maryland Home Credit's not available anymore. Oh, sorry, I did that. Didn't mean to do that. The Maryland Home Credit's no longer available, so that's not important. The Maryland Mapper is a tool from the Maryland Department of Planning. And in it, you can plug in an address and see if you can qualify as a first-time home buyer, even if you owned the home last week. In some places, you can qualify as a first-time home buyer because those areas are considered targeted. So in targeted areas, you may qualify at a higher income limit, at a higher acquisition cost, and so you may qualify for additional funding. And you can see sometimes targeted areas in the income limits, because when you look at the income limits, some counties are fully targeted where they have the non-targeted area grayed out, such as Allegheny, Baltimore City, Caroline, Dorchester, Garrett, Kent County, Somerset. Those are targeted. So you're purchasing in those counties. You could have owned the home last week. And in some counties have no targeted areas at all. So Calvert County, Carroll, Cecil, Charles, Howard, Queen Anne's, St. Mary's, those have no targeted areas at all. So it's an important tool to use. You can definitely use it on your own. If you go to the Maryland Mapper, you can just pull it up and you can plug in an address and it'll show you whether you're in a targeted area or whether you're not in a targeted area. And really, your lender will walk you through this to see if you can qualify in a targeted area and qualify as a first-time home buyer. And if you qualify as a first-time home buyer, you get better rates with the Maryland Mortgage Program. If we go back to the interest rates, and I'll pull up the rate sheet again. On the first-time advantage side, you must be a first-time home buyer, but that's where you have the better products, okay? The better rates and all the specialty products where you have to be for a first-time home buyer. On the flex side, you cannot be a first-time home buyer. You could be a repeat buyer, or sometimes it's a first-time home buyer that's purchasing here because their spouse or their significant other doesn't qualify as a first-time home buyer. So you can still use MMP, but you have to use it on the flex side. So, and we only have 3 products there. Make no mistake about it. 90% of the production with MMP comes from these products right here on the first-time advantage side. And really, your lender will walk you through the eligibility requirement for the Maryland Mortgage Program for you to be able to take advantage of our products. Our 5% product gives you a ton of money towards the purchase of a home. Imagine that you're buying a house and it's $400,000, and that's the average price of a mortgage with the Maryland Mortgage Program. 5% would give you $20,000 in down payment and closing cost assistance. And answering your question earlier that you had regarding EMDs, earnest money deposits, you can use the Maryland Mortgage Program as a backup for your EMDs because you're going to get 5% towards down payment and closing cost assistance. So we've seen lenders use this 5% product uh, and allows the borrower to dedicate their money towards the EMD, knowing that they're going to get it back when they do the 5% loan product. So if there's leftover money after you purchase a home, you may be able to get back EMD money, inspection money, appraisal money, uh, things that you paid out at closing. You may be able to get it back subject to agency guidelines. So we see cases where borrowers are getting 2,500 back, $3,000 back because there's so much money available that you're able to get refunded for some of the things you already paid on the front end. So you may be able to buy a home, use our 5% product or our 4% product, and you have a minimal expenditure out of your own hands. So yes, it's great to set up a savings account and purchase a home, but that takes time. In the meantime, people are buying the houses that are on the market. So this program, these products allow you to be able to buy a home today at today's prices, as opposed to you waiting a year where, yes, you save some money to purchase a home, but now prices are higher because, as you saw in the first chart from Amy, you purchase a home at 400,000 and 5 years later it's 480 some thousand. So really imagine that you buy a house of 400,000 and a year from now home prices are 120,000. Yes, maybe you save 5,000 in your savings account, but your house costs 5,000, 10,000, or $15,000 more because it took you a year to save that money anyway. So you don't really get ahead by much unless you save a lot of money, unless you're very diligent towards
Frank,
doing
we do
that.
have a couple of questions. We are over time already, so thank you all so
Oh,
much
okay,
for staying with us.
sure,
We do have a couple questions that, if Frank, I believe, are going to be great for you if you're willing to stay a little bit longer.
sure.
Um, Specifically, we have questions about the Smart Buy program, and if you can explain a little bit more about the specifics of if you're going to be able to use how you qualify for the Smart Buy program, specifically the maximum income allowed for that. And I believe that there's some details that you have to qualify for in terms of how much debt you can have in student loans left. Am I correct in that, Frank?
Yeah, I mean the amount that we pay towards student loans is up to 20,000. So really, I saw the question earlier. It's about 300,000 in student loan debt. We're not going to be able to help you unless you can pay off the difference of closing. So we'll pay off the 20, but if you owe 300, you'll have to bring 280,000 to closing to pay off the remaining student loan debt. So in that scenario, it looks unlikely. Now we've seen cases where parents or grandparents will help a borrower pay off the remaining student loan debt and take advantage of the 20,000. This worked really well when our down payment assist when our Smart Buy money was up to 50,000, but it's not 50,000 anymore. The average student loan debt in Maryland for a state school typically is about 30,000, and on average we do about 2 to 3 Smart Buy loans a week, sometimes more, sometimes less. Last year we did about 350 loans in Smart Buy, and it does help people. It's just it's a limited program as far as funding from the state. Um, your credit score for the Smart Buy has to be a 720, so that's another uh, level of risk where you require the credit score to be higher because you're getting $20,000 towards to pay off student loan debt. Now, Smart Buy does allow you to pay off the student loan debt, and as long as you remain in the home for 5 years, you don't have to. Uh, it'll be forgivable after 5 years, but you have to remain in the home for 5 years. In all cases, our down payment assistance money must be paid back when you sell the house, refinance, or no longer live in the property. We have no grants. Okay, so I just want to make that clear. People refer to our program as the grants from the state. We used to have grants. We don't have grants. We haven't had grants in about 3 years, and they may come back in the future, but at the moment, we don't have them. So the money must be paid back. The tool is a tool that allows you to buy a home today in today's conditions. You may refinance in the future because maybe you pay down your mortgage a little bit. your mortgage increases, when you refinance at a lower rate, you may be able to incorporate the down payment assistance that you borrow from the state and pay it off completely when you refinance. But we're not going to be able to resubordinate that second lien when you refinance. So, but still, the product is highly favorable and useful to be able to allow you to get into a home. Our income limits are pretty high. If you're a medical student or you're a doctor, there are plenty of programs. You may be able to talk to Amy about those that do not involve down payment assistance from the state. Your income limits are going to be way higher than we allow. And there are banks and typically lenders, brokers will have specialty programs geared towards high student loan debt or higher incomes that she can walk you through. But typically, those don't come with down payment assistance from the state. You may have other sources and credits from lenders, but not necessarily from the Maryland Mortgage Program.
Wonderful. Thank you so much. I'm not seeing any other questions, but yes, please talk to industry professionals. They will be able to help answer your specific questions about your specific situation. And a good realtor, a good lender is going to do everything they can to help you get into that home because they want you to find your first home. They want you to find that place that you can actually, at least for me, the wonderful thing was not worrying about how many nails I was putting in the walls to hang up decorations and make the space your own. There's so many reasons to buy a home, and we're all so excited for you. So please talk to the experts, and they'll do everything they can. So thank you again so much for your attendance. Frank, I am going to turn off your screen sharing.
Okay, no problem.
Uh,
If I could just say one more thing, just
okay.
just to wrap it up, and you can use MMP in combination with city programs and county programs. And a quick plug for Baltimore City. Baltimore City has a lot of down payment and closing cost assistance programs. You can combine with the Maryland Mortgage Program. Pathways to Purchase in Prince George's County has up to 50,000 in down payment and closing cost assistance through their program in combination with the Maryland Mortgage Program. And I believe Anne Arundel County just increased their amount to 50,000. You will have to check with your realtor and check with your lender because when you use some down payment assistance from a city or county, the housing counseling requirements are more specific and more targeted. So you have to talk to a realtor or a loan officer that does those programs. It has nothing to do with the state, but you can combine them usually with the Maryland Mortgage Program.
And you can get more information about some of the programs that may be available to you based on what local county you're looking at or what area on marylandhomeownership.com as well. If you
Okay,
want to do some
cool.
preliminary research before you talk to an expert, but an expert will be able to help you out for sure too.
Excellent.
On that note, thank you all so much. And as a reminder, we'll have another Your Home Buying Keys webinar next month on October 9th from 6:30 to 7:30. Please share that date with anyone who you think would benefit from this information and another soon-to-be home buyer. We love any feedback you're willing to give us, and I'm putting in the chat right now a link to a Google form. If you don't mind taking a moment, it's a very short form. We'd love any input you have about how we can make this better for other soon-to-be home buyers in Maryland. Be sure to check out marylandhomeownership.com for more resources and information on home ownership. We wish you all the success in your journey. And if you have any questions, please don't hesitate to email webinar@mdrealtor.org. Thank you all so much. Have a good night.
Thank
Thank
you
you, Jackie.
guys. Bye.